Now, hoping to tap into this trend is Brookfield Asset Management. They've just launched a new AI infrastructure fund. We've got the perfect person to talk about it. Hadley Peer Marshall, CFO of Brookfield Asset Management, joins us around the table. Hadley, pleasure to have you. Thank you so much for joining us around set. This theme that we're seeing in AI around the world, it's really pushing this concept of, is it too hot of a theme for people to get into now, years after this has happened? Are you seeing that sentiment shift in the infrastructure space, in the private market space?
No, I mean, this is just beginning. As if you think about the numbers that you just laid out, I mean, there's a lot of capital that needs to go in. We estimate about $7 trillion. I mean, that's a large number. And if you think about that, that's going to bring about 10 trillion, expected 10 trillion of productivity on an annual basis. So a lot of money still needs to go in.
Well, talk to us a little bit then when it comes to who is actually getting involved in this. I just laid out some numbers that are coming from the hyperscalers that are really driving the investment. Is there a way for the smaller mid-market funds, the smaller players, to get access to what is clearly a technological revolution?
Yeah, I mean, you're seeing across the board, across all of infrastructure, playing in the data center space and more broadly across that. But I think when you think about Brookfield, what is quite unique is that we're marrying up our infrastructure, our renewable business, and our real estate, which are leaders across the board, into one strategy, that AI strategy, in order to produce holistic solutions, because a lot of these are going to be large industrial investments that we need to make.
So, Hadley, so you've announced, Brookfield, I know this is a little while ago, has announced a new AI fund. And I think just recently you said that you've got the necessary backers, or you've got some backers for that. At the same time, we're covering the fact that there's a bit of a backlog in exits at certain PE houses. And I wonder if that is weighing on investor sentiment towards these funds. Is it proving more challenging to get the money in, to invest in these funds, as a result of not being able to get the money out?
You know, I mean, if you look over the past 12 months, we've raised about $100 billion. And so we're still seeing a lot of opportunity set from our investors' side. On the monetization front, it is strong. I mean, we are seeing a lot of monetization opportunities, whether we're looking at partial sales or full sales. And we monetize about $75 billion of assets over the past year. So the numbers do indicate that there should be tremendous opportunity. And then when you think about the opportunity set, and that's quite attractive. I mean, this is really client-driven.
OK, so you're impressed by the level of LP interest, then, in this kind of fund.
Absolutely.
So thinking about investing in AI and data centres, I mean, you're kind of investing in a moving target, aren't you? Because we're really not sure what this technology is going to deliver and by when. I noticed on one of your Sweden programmes, it's going to get to full capacity in 10 to 15 years. That seems like a long time in AI terms. I mean, we don't always understand fully what we're investing in. So how do you build that fear of obsolescence, I suppose, or that nervousness into the structures?
We have to remember what we're building is the backbone of the AI. So we're not actually producing anything that's going inside. We'll look at the vertical chain, and we will be a major player from that perspective. But we are looking at this long term. Now, what is valuable right there is the fact that we can do it with scale and speed. Maybe not as fast as you would like it, but it is going at a very fast pace.
How much time do you spend thinking about electricity?
A lot.
I would imagine.
Yes.
No,
please.
How big a problem is it?
I mean, that is really what is the bottleneck when you think about it. I mean, some of the timelines that we're playing with. You know, electricity is going to be the key focus. And so some of the places that we really are focused on is, one is behind the meter.
Yep.
And then also bringing data centers to where there is electricity.
What is your overall view of the AI story, though? Normally, investment cycles, railways, canals, everything, you kind of go through this process where you spend a lot of money, a lot of it's debt-fueled. You get to the point where clearly there is a kind of cathartic moment, and then the reality dawns after that. Are we going to go through something similar here?
Well, there are a few differences. If you think about it, I mean, just take the U.S. as an example. Data center vacancy is lower than 2.5%.
Sure.
Below 2.5%. So right there, you're seeing the demand. And then when we look at the opportunity set, we're very focused, whether it's across any of our businesses, you know, we're always looking at long-term contracts, take or pay, and making sure we're not building on spec. That's critical. And so that's where you see the demand, because
I think others are building on spec.
We're not seeing that right now.
Right. So nobody's building on spec right now. This is all going to have an end use. This is something that is going to be deliverable further down the road.
Exactly. Just because of the demand. I mean, that vacancy is a good example of that.
Okay.
When we talk about some of that build out, though, are you seeing differences in approaches outside of kind of the energy component to it, from how you approach it in the States and the energy build out there versus how you approach it in the various parts of Europe? Are there parts of Europe that are more ready for this kind of investment than others?
I mean, that really comes to some of the sovereign partnerships that we've developed. I mean, Sweden and France are two examples of that. But if you look across the board, we're looking at 7 AI factories, right? So that's in 5 different countries. That totals $200 billion of investment. And so that opportunity set is quite large on a global basis.
So you've got a lot of experience of dealing with a lot of different geographies, Hadley, and the legislative issues that you might face in those different places, the delays you might face in those different places. And you can name names if you want to about where you're not impressed, or you can just tell us what it is that you're, what makes for the best environment, what makes for what adds up to your decision to say, yes, we'll invest there because we think we can get the energy as quick as we need it.
We invest in over 50 countries, but we're very specific about where we invest. I mean, we want to see a strong governing law. We want to build up partnerships. We want to see a large opportunity set. And so those are the mechanics we're looking for in order to really put the feet on the ground.
And is sovereign AI, how much of the pie is that going to be, do you think? Sovereign AI versus hyperscaler AI and all the other various, in terms of those that are driving demand for the data centers you're putting in, how much of this is going to be for sovereigns and how much for private businesses?
I mean, both, right? Both are going to be quite large. And when you look at it, I mean, the sovereigns are going to need the capital and the expertise, the ability to deliver it holistically. Hyperscalers, they're going to be great partners as well from that perspective. So it really is an even trade in that perspective.
Is this a zero-sum game? Is what goes into AI not going somewhere else? Is there a kind of, are we, as a society, we're spending a lot of time talking about how we invest into AI and how we build that capacity out. But does that mean that other areas of the economy maybe aren't getting the investment that you would normally expect them to get? Is there a balance here, or is there kind of more funds coming into this sort of process because of the hype around AI?
When you look at Brookfield, I mean, we're putting more capital towards all of it, right?
Right.
Because you're absolutely right. I mean, there's other sectors, if you think about midstream, if you think about utilities, if you think about transportation, et cetera. And so if you look at what we're doing, we're scaling up all of our strategies to meet those needs.
It's great to see you. I think you've got a panel coming up a little bit later on, 2 o'clock. We're very much forward to seeing you on that. Hadley Peer Marshall, the CFO of Brookfield Asset Management.